Welcome to Invest in Changing Lives. My name is Delphine Nguyen, one of the co-founders of Chase Capital. Today, I'm so excited to have Kevin Cawley from Cost Segregation with us. Hi, Kevin, how are you?
I'm doing great. How are you?
I'm doing wonderful today too. Thank you. Could you please share a little bit about yourself and what you are doing?
Yeah. So I do cost segregation, engineering-based cost segregation. And what that does for any investor of any size, whether you're starting off buying your first property, maybe valued at 300,000, up to, I work with very large investors who have billion-dollar portfolios, but I'm doing the same thing for all of them. And that is accelerated depreciation. Essentially, I have an example which I'll show, but there's two ways to depreciate your properties. Here in the US, you have straight line depreciation, which I'll go over an example, which is really just what's your purchase price divided by 39 if it's commercial, or 27.5. Or you could do accelerated depreciation, where we actually go in and segregate or separate all of these parts and pieces of a building. You're allowed to depreciate 100% today. So I have two examples that I'll share.
Wonderful. So could you please be more specific? Like give me an example. What item would qualify for cost segregation?
Sure. Yeah, I actually have a full report. If I could share my screen, give me one sec.
Please do.
Here's a real example from a report. Can you see this?
Yes, I can.
So this building was on normal straight line depreciation. And right after this, we'll go into that. So I could show you, here's straight line, here's accelerated, but here's some 5-year components that qualified to get depreciated 100%. Cabinets, millwork, moldings. So that could be trim, just like in my house here. Flooring, carpeting. You could see this was a industrial building. So we have dock equipment, interior dock walls, things like that. And then here were some 15-year components in this row: site drainage, parking lot, landscaping, sidewalks, curbs. These are some big numbers here. And what we do is we allow the client to depreciate those parts and pieces 100% today, and they get a much bigger write-off than they would get if they stayed on the straight line schedule. Which could be a good segue. What do you think, Delphine? I'd like to show, before we get in too deep into the accelerated depreciation, an example of straight line. How about we do that?
Yes, please do.
Great. So here's an example. This is a PowerPoint I use very often, and it shows how what happens when you purchase a building, you automatically get put on straight line depreciation. So in this example, what I'm showing is, let's say I bought this building today for $1 million, right? If I got that for $1 million, that's a good deal anyway. But let's say I bought it today for $1 million. The IRS and my accountant is going to say, hey, Kevin Cawley needs a depreciation schedule, right? So they're going to take my purchase price minus any land value. And then if it's commercial, you divide the purchase price by 39 years. If it's residential, you divide it by 27.5. Okay. So we have the $1 million purchase price divided by 39 years would equal 25,600 in depreciation, or a write-off, right? So from year one, the year I bought it, up until year 39, every year I get an automatic write-off, 25,600, 25,600, over and over and over and over again. The reason we don't like that, and the reason cost seg exists essentially, is there's a lot of parts and pieces that make this building what it is, not all of which will last 39 years. So what we do is we go into a building and we say, hey, all of this won't last 39 years. And we'll say all of this won't last 39 years. And I have another example here. I'll show you, which this is a client who recently purchased a property. It's 904,000, so close to $1 million, right? If the client stayed on this straight line depreciation, I'll show you, his write-off would be 23,179 every year. That's just straight line depreciation. And what we do is we say, based on the data you've given us, we're going to say 17% of your building could fit into the 5-year category, and 3% could fit into the 15-year category. So we're going to depreciate 20% of his building. Okay. So instead of the client getting a $23,000 write-off every year, what we're going to do for him, I'll show you real quick, is get him $177,000 write-off this year. So you'd have to wait 20, 40, 60, 81, 20, 40, 60, call it 8 years. He'd have to wait to get this write-off. We're going to give it to him today. And then we multiply that by the client's tax rate. And right here, we just reduced the client's income tax by $65,000 today.
Wow, that's a big number.
Yeah. And so that's money the client can, reinvest, purchase more property, pay down debt. There's zero restrictions of what you can do. But it's very, most clients who are savvy want to take this money, reinvest it, earn some type of multiple on that.
Thank you, Kevin, for sharing the slideshows. We appreciate it. And I really like seeing big number that we can, bring money home, right?
Yeah.
Early in the investment process. So that's great. Now, could you share with us, when should somebody start the process?
So it's a very common misconception that most investors, still people I meet with today, daily, think that, oh, but I bought it 2 years ago, I can't do cost seg. They think you have to do it the day, the year you buy it. It's not true. So I've personally gone back 17 years. A client owned a large hotel for 17 years. And I told them, hey, just let me run the numbers. So it's free for us to do these estimates. So that's for anyone listening. It's free for us to work up an analysis. And it turned out we could get him $1 million write-off still, even though he owned it 17 years. So he was very happy to see that. Keep in mind, he used 17 years of depreciation. So his benefit wasn't as big. So, the best time, of course, is when you do purchase, but it's still very powerful if you've owned, several years. And when it's free to have a look, when in doubt, just have us run an estimate and then you can see, is it worth it or not? Right. So you could go back far. 17 was the furthest I've gone back. Maybe other reps have gone further. I'm not sure, but that's quite some time.
Yeah. Would the CPA be, like, no, I have to go back the 17 years and do all the tax filing and
amending. Yeah. Amending. So what's beautiful is with cost seg, there's a thing called the Form 3115. And my firm does that for the CPAs. And it's a change in accounting method form. Once that's completed, there is no need to amend the tax return. So that's a very, very good piece of our business. And if they did have to amend, I'm sure we'd get a lot less deals because that's a lot of work going back.
A lot of deals, a lot of work for sure.
Oh yeah. And then I'm sure the accountant would charge you, oh, I got to go amend all these returns. It probably wouldn't be worth it at that time. Yeah. So no need to amend, put it that way.
All right. So let's say I'm an investor. So what do I have to prepare for a cost segregation study?
Sure. So we have
I have to do and how much you have to do to help us?
Sure. So it's very easy. It's not like filling out or filing for life insurance. We don't need to look at tax returns or any of that. If there's a depreciation schedule available, so that would be available if a client purchased in a different year than the year they're filing tax. So if you purchased in 2020 and now it's 2021, there's a depreciation schedule that the accountant would have. All we have to do is look at it. Simple as that. If not, what we would do is, can you see this screen?
Yes, I can.
So we have a very simple data form. So I'll show you right here. We put in your name, and this is a digital link, and it's actually at the bottom of my email signature. It's also a website. So you see CSSI. We could put in, anyone's email here, phone number, the building cost. So all we need is building cost. When did you buy it? What type of building is it? Right? What's the address? the building city. So we're nationwide. I think that's important for people to know as well. We're not just Illinois, it's all across the country. So we get the address. And then once you get your quote, it comes directly to me and my corporate office. And within 48 hours, we could usually provide a cost seg analysis, and very powerful stuff. And what we do is we're not trained like a sales organization. So what we do is we say, Delphine, thanks for filling this out. Based on the data, we can get you X amount of write-off, which will reduce your income tax by X. Bring this back to your tax advisors. And if they say it's a good idea to do this, then we'll do it. And so people really appreciate that, because there's a lot of sales people like, oh, if you sign today, I'll give you 500 off. And that's no techniques like that are used here. It's kind of, we're here to be a resource. Here's what we could do. If it could fit into your tax plan, let's do it. And if it can't, that's okay too.
Yeah, well, that is a really good approach, and that make the clients really comfortable, right?
Yeah.
So they don't feel like they engage in something and then, oh my goodness, so then I have to, to
Right.
put it away or something. Yeah, right.
Yeah, exactly.
No one wants to be sold, right? So,
Right. Yeah, that's the best way to put it. So I always tell people I'm just here to be a responsive resource. I guess, one thing that popped in my head while we're talking is too, a lot of clients now that I've done deals with, let's say they're going to buy, they may buy building 1 or building 2. They're not sure which one yet. They'll come to me and say, can you do a cost seg analysis on both? Maybe I'll pick the one that gets a much bigger write-off. And so we are used commonly in that manner too, which we're happy to do. And of course, we're nice guys, but it's not because we're just nice guys. Of course, we're hoping it would lead to business too. But sometimes it does, sometimes it doesn't. We're happy to accommodate that.
So if everything is given equal, then cost segregation is something that helps, for the decision-making process too, right? So
yeah,
you're the one that helps them to, I don't know if I should say save on taxes, but definitely can get more cash flow for the beginning years, right?
Yes. And that's the whole point of it, is to increase cash flow and, kind of improve the economics of the deal. So.
Perfect.
Yeah.
All right. So if somebody just have like a few unit or a small shopping center, they say, oh, this is very small. Maybe I just do it to save some cost, save some money,
Sure.
versus hire a company like yours. So do you think that somebody should do their own cost segregation?
So I don't. I get that question often. And so, I would say 90% of my personal business comes from tax professionals, because they go, man, I'm not gonna go look at the window treatments and the type of flooring and, look at how this attaches to a building. That's not stuff taught in CPA school, right? It's not taught in accounting. It's a true engineered service. So I call it an engineered tax service. So we go out, we get very granular, super detailed. I'll go right back to this example where I showed this full report. A lot of these parts and pieces here, can you see the screen?
Yes.
They will not be caught by a typical CPA, right? So it's very common. I'll point out here, a parking lot. It's very common for a tax professional to take a parking lot and put it on 15-year property, right? That's okay. So they're doing a good service for their clients. However, they will not put a dumpster exclosure. They likely won't put sidewalks or curbs on there. And when you look at the dollar amounts here, those are big deductions that a client could miss out on. And so the whole point is, why don't you let us get in there? We'll go as aggressive as we can be. And at the end of the day, yes, your client pays a fee, but he gets a much bigger write-off. And so that's why we just educate them on that. And they kind of go, hey, you do it.
Yes, yeah, yeah. So people can look at it like first is professional, and
Mhm.
second is like if we do it, and then who gonna do our own job to look for opportunity and buy more buildings, right? If we
Sure.
focus on the windows and the flooring and everything in detail. So yeah,
Yeah.
probably that's a
Well,
good thing to do.
you know, a good point too is, let's say you did your own study, Delphine,
Mhm.
and you get audited, and the IRS is going to go, how did you know to take the sidewalks and put it on 15? Even though I just showed you, you can, but they're going to say, how did you know that? And you, oh, someone showed me. It doesn't matter. You don't have the credentials to do that. So they're going to say, this is all disallowed. And they'll probably say, let's look at your other buildings now, which is like an investor's worst nightmare. Then if you have investors on the deal with you, they're going to want to look at their stuff. So what's nice is we get very aggressive, but if you're ever audited, our team will send the engineer who worked directly on that study anywhere in the US for no cost, and we'll defend our study. And so we've done over 30,000 now. That's happened 12 times, but we won all 12 audits.
Wow.
So that right there is worth the fee alone, you know, you're
Yes.
protected. Yeah.
Whenever somebody get audited, then that's not only time consuming, but also all the efforts and gathering all the information and
Oh,
writing it.
yeah.
Well, if somebody else take care of it, that would be great.
Yes. Yeah.
Oh,
Definitely.
yeah. So now, who are the people? Mainly the property owners who need your services the most.
I would say anyone who's facing a large income tax bill, you know, the way I look at it is we help people not overpay the government, right? So if you don't have to pay X, we could reduce it to Y. You'd rather pay Y because your money's much better off in your pocket than with them because, as we all know, they're not good stewards of money and investments. So, so I love helping anybody, business owners. One thing that just came to me too is you don't actually have to own the building to do cost seg. So I've done several cost seg studies for law firms that'll rent a floor or lease a floor downtown, and they'll spend $500,000 on improvements.
Uh-huh.
We're able to cost segregate leasehold improvements as well.
Wow.
So that's a big deal. So anyone who is doing improvements or made a purchase, they should at least look into this. I can't tell you or anyone else, will this fit into your overall plan? I don't know. But anyone purchasing a building or doing a large build out should at least have these numbers ran, and then they could see if it fits into their plan. And if it does, we'd love to work with them. But if not, I will say cost segregation is not for everybody who owns a building, right? It's for certain people, it could work well for.
Yeah. So the key is the people who have a high income. That would help them a lot, right?
Yes, yes, yes.
So
And for the people who have, they may have made a bad investment and have a big loss that carries forward anyway. What we would do is just add on to that loss. So it prolongs you paying tax. Some people say, no, I'll just call you when that runs out, which is fine. And some people say, no, let's make it as big as we can. And then I don't have to deal with it for longer. So to each their own, I don't push one way or another.
yeah,
Yeah.
that's great to know that we have those options for
Yes.
property owners. Yeah. So what are your top pieces of advice to the real estate investor that you would like to give out today?
I would say it's kind of, I'll probably just repeat what I just said was really, if you're new to cost seg, if you've heard about it for a long time and never wanted to explore it, my one piece of advice is always have someone, right? Hopefully it's me. If it's not, it's okay. But have someone run these numbers on your portfolio and then collaborate with your tax professional or your tax attorney or whoever. And you could ask them, they'll be familiar with this, and say, hey, I looked into this. Should I do this? And they may learn something. So anytime you could increase NOI or increase cash flow while reducing taxes for you and your investors, don't be shy, at least have a look and get educated. That would be my piece of advice.
Thank you so much, Kevin.
Yeah.
Now, last year I met you while we're serving in the board of directors of CCIM. I really enjoy our community. How about you? How did you join CCIM?
Oh, I love it. So this is the third year now that I'm the platinum sponsor. So the highest level of sponsorship. I really enjoy it. I know for a fact my firm has gotten business from it, even other reps other than me, even though I sponsored it, which is fine. I'm happy that the word's getting out there. I was very happy. We did a webinar a year ago for CCIM, given COVID and stuff. I think there was 40 or 50 people on the webinar. So I think we're going to do another one this year, and great feedback. There was a lot of brokers who do substantial business who said, man, I've always heard of it. I never knew it works like that. Or I didn't know it's that powerful. I didn't know. So the education part is my favorite part. And seeing someone's eyes light up where you go, hey, I'm going to save you 200 grand. It's like, yeah. So it's very fun. And the people at CCIM are very fun as well. And it's good to do business with people you like. There's no better way to do it. You can have fun and you can earn money, and it's, it's the best feeling.
Fabulous. Yeah, that exactly. That's how we join CCIM and join the community to help each other, right? To bring in the value. Just say, just like what you say, the brokers like, wow, I didn't know that. So that really bring them the value. Then that's wonderful. So who do you think should join CCIM with us?
I think I'm glad, years ago, maybe 5, maybe a little longer, I always thought, hey, this is just for brokers. I always thought that. And then I met Jim Conrad, the current president for the Illinois chapter. And he mentioned, no, it's not. The current president was a guy, Ankur Patel, who was a banker. And actually, he's a good buddy of mine now. And I met him at a CCIM event a couple of years ago. And he's a great guy. And that's something I had no idea that, hey, it's not just brokers. So what I think should happen is anyone who's touching a real estate deal, so appraisers, lenders, maybe some insurance, property casualty insurance guys. Obviously, if they have good character, they should really consider this because, CCIM is for people who are doing deals. They're active. They're not just getting started. They're usually more experienced and they've been through that CCIM training, the classes. So who should join? I think more service providers for real estate who touch the deal, because it is heavily broker focused, which is fine. But yeah, because everyone will have different insight. And so the more we complete the circle of who gets involved in a real estate deal, I think the better the association will be.
Wonderful. So you joined CCIM for 3 years, right? Mm-hmm. How did it help you so far?
So the network's phenomenal. And then I often get clients who say, hey, I'm going to expand, or I'm looking for, a new office and things like that. In my career, like I said, I focused heavily on CPAs. So there wasn't many brokers I knew. And so CCIM helped me by connecting me with, like Jim is a specialist in industrial and office for McLennan. And then you have your specialty. And then, Graham Gold, a friend of mine, has his only triple net, right? Which I learned too. I was like, that's all you do? Yeah, I'm a triple net broker. I'm like, oh, I just thought anyone could do each of these. And so I learned, everyone specializes. And that was new to me too. I'm like, oh, I thought you just sell anything, a house, a high rise, a self-storage. He said, no, man, it doesn't work that way. Yeah. So
everyone has their own specialty. So
yes,
it's so wonderful. So you came, and then that's how you can find the one who specializes in each asset, like asset type, and then you can refer, for your clients, right? You can find great referral. So wonderful. All right. Thank you so much, Kevin, for sharing uh, the knowledge and also the advice today about cost segregation. We're looking forward to seeing you more in the webinars like this to, to share with the audience what will help us, help you to grow together.
Perfect. Yes. Thank you so much for having me. This was great. And I'm sure we'll talk very soon.
Thank you.